Welcome everybody to the course, Year-End Financial Audit Management, Best Practices so your audit runs smoothly. My name is Chris Benjamin, I'm a CFO and an MBA. I put together this course because the year-end financial audit can definitely be a daunting task. First of all, it's something we only do once a year in the accounting world. Certainly we go through our quarterly audits, but those are a little bit smaller scale. The year-end is definitely much more intense. It can last several weeks. Lots of your accounting staff will be involved. You have auditors running around asking for documents, all sorts of different things that you need to pull. They're asking you, how did you calculate this, that, the other thing? Show me backup for this. There's just so many questions. It can be overwhelming because you're also trying to do just your normal job as well. So definitely a stressful time. There's a lot of deadlines involved. So I wanted to put together this course to sort of help everybody out there involved in the world of financial audits. So most likely you are the company who is being audited, and you need to sort of a better way to handle this so it's a little bit less stressful, a little bit more streamlined, and that's what we're going to learn in this course. So over my career in accounting and finance, I've worked with several different auditors, I've worked for several different companies, and I definitely have some best practices that will help you implement them. So I'm going to introduce you to myself a little bit more in the next video, just talk about my background and how I learned all about audit management. But for now, we're just going to leave it at that. So I hope you enjoy the course. I look forward to your reviews of the course. If you can do that for me, I'd really appreciate it. Feel free to ask questions along the way as you're taking the course, whether it's through the site or send me an email. And that's it. So let's get started on the course. All right, so a little bit about myself. My name is Chris Benjamin. I go by the Rogue CFO. I got an undergraduate degree from the University of the Fraser Valley in Canada. That's not on the slide, but and then I later went on and got my master's in business, so MBA from the University of Washington, where I focused on entrepreneurship. I really had an interest in sort of leaving the corporate world and getting more into working with smaller growth stage companies, those startups that then ultimately grow and do become public companies. So I have over 20 years experience with both large publicly traded companies and then as well as those smaller stage startup early ventures, typically in the CFO role. The most recent 10 years have been spent working as an interim part-time CFO on a partnership basis. So basically I come in either on the board of directors, working as the CFO, basically bringing all my experience and education and knowledge that I've picked up over the years and helping implement that to my latest clients and helping them run more efficiently and sort of showing them best business practices and solving problems, whatever they might be. A lot of times I am just in that CFO role, so I'm helping manage the accounting department, set up accounting systems, work with auditors like we're going to talk about in this course. So I've worked with close to or probably over 100 companies at this point in various capacities. So like I said, sometimes I come in and fill that ongoing CFO role. Other times I come in and just do one-time projects. It might be create a financial forecast, help with evaluation, general startup consulting like best business practices again. And sometimes it is to work with external auditors and help facilitate that process. Since it's such a big daunting task, sometimes companies just need help. They need somebody there who's familiar with the process, come in, be able to sort of be the liaison, if you will, between the company and the auditors. So that's the value I bring there, and that's kind of where my experience comes from. Just a final point here, I brought several companies from seed stage to IPO as well. So I really have seen the entire process. And along with year-end audits, part of the IPO process is actually working quite a bit with external auditors. So quite a bit of experience working with external auditors. I know it's definitely not everybody's favorite task, but I think over the years I've learned sort of the best way to approach it and sort of work hand in hand with the auditors and not treat them as adversaries. So that said, that's a little bit about me and my background. I'm excited to get to the content, so let's start talking all about the audit process and the best practices that you could be implementing. I just wanted to provide you with a quick little video about the Udemy review system. About 10 minutes into the course, you're going to be prompted with this screen. It's going to be asking basically, how would you rate this course so far? You can leave your star review, or you can say, ask me later, or ask me at the end. Now, a lot of times students feel like they're not really at a point where they've seen a lot of the content yet. So don't feel like you have to leave a review at this point. You can certainly say, ask me later, ask me at the end. And after a point where you have taken a lot more of the content and gotten past all the introductions, etc. If you do, though, want to leave a review at this point, always greatly appreciate it. And I'd encourage you, regardless of whether you do it now, later, or at the end, leaving a review really helps me out. It's your feedback that inspires me to make more courses and lets me know, what it is about the courses that you really like. So this is an actual course that I'm taking. I am going to give it 5 stars. And then so on the next screen, after you click those 5 stars or whatever stars you give, it'll ask you, what tells about your experience. Was it a good match for you? So, I will write in something like, content is very relevant to what, I was hoping to learn. The instructor is very clear and provides great content. Just an example of, types of feedback that help. So this will obviously help the instructor for the course that I'm taking. So whatever feedback it is that you leave for me, definitely I read them all. I definitely take it to heart, and I definitely put that into effect for both the current course, if there's any ways I can change it, or future courses that I make. So I just want to give you that sort of summary, just so a lot of people are kind of surprised, especially if it's their first Udemy course. Why am I being asked to give reviews when I'm barely into the course? So you know that you have your options. Leave feedback now, later, or at the end. And when you do leave feedback, really appreciate those the stars and the comments, so that I know what it is about the courses that you love and you don't love. Thanks so much, guys. Hello, everybody, and welcome to this lecture where I'm going to go into some additional information related to Microsoft Excel. And I'm recording this in September 2019. I wanted to add it to the course. I get a lot of messages asking me for more tips and tricks and shortcuts you might be able to use to kind of navigate Excel a little bit faster, or maybe spruce things up, make things look better. So I will say this: if you don't have that much interest in Microsoft Excel or learning a bit more, feel free to skip this lecture. It doesn't necessarily 100% directly relate or pertain to the content of the course as a whole. So it's just kind of additional information that I want to help people out, for all those people who do request it and want to be able to navigate Excel a little bit quicker and more handily. In a lot of my courses, I do put kind of an Excel tutorial up front and early on. So this is kind of part B of that Excel tutorial, if you will. So, hey, nothing wrong with some additional knowledge, I would say. So if you're still here, let's go through a few things I wanted to go through. A lot of my courses are obviously, financial, accounting, economics, etc., or just straight up building stuff in Excel. So I want to give you a little kind of preamble, if you will, on building a quick little table. So we're going to start with building a table. Then I'm going to go through some shortcuts you can use with series and formatting. And then lastly, I'm going to show you just some quick hits on building charts, etc. It's so simple. People see this flashy charts and think, oh my god, it must take forever to build those. No, a few clicks and you could have a nice professional looking chart. So let's build some data though, first of all, to build a chart off. So I'm thinking maybe you want a 3-month sales chart. Let's do July, August, September. Now the way I approach creating something in Excel, if you will, I like to put in all the data first. It's not going to look pretty, and then we worry about the formatting and the formula. So let's just get some data in here, then we'll do all the formulas and formatting. So let's do like a 3-month sales little chart, July, August, September. I'm actually going to zoom in here. I realize these are small when you see the full screen. And then let's say it's product 1, product 2, oops, I'll fix this really quick, and product 3. So this could be the things that you sell, the items you sell, the widgets. It could be services you provide, different consulting services, whatever the case might be. If you're a Udemy instructor, maybe it's the different courses that you have and how much you've sold each time, or how many students you have, whatever the metric is you want to track. So let's just start with 450. Again, these are completely random, but try to keep it relative. We're not going to put in some insanely high number. Maybe this one doesn't do quite as well, but maybe it's something that's higher priced. Who knows? And let's do 301. And then down here, let's say we sell a lot more of this item. Again, we're going to make these dollar signs. I'm going to assume this is a dollar item. And let's do 88. Okay. So we've created this little graph, or chart I should say. Doesn't look that exciting, right? If somebody asked you to summarize your sales for 3 months by product and you handed them this, yeah, it has the information, but it's not that great. So let's do a bit of formatting first, and then we'll throw in some formulas. So first things first, I want to kind of make these a bit bolder. I like bolding things that are headers and kind of row labels, if you will. So Let's center them first. There's shortcuts up here on the top. We're going to use those. So these right here. Now I'm kind of going through these a bit faster. I'm not explaining step by step every single little box what it is. These are the most popular things you can use to quickly format. So we're going to use this. This will center everything that we have highlighted. If we want to bold it, we're going to hit the bold. Now, I didn't cover, how did I highlight, things like that. A lot of that is in my kind of like basic Excel information videos that are on a lot of my courses. So maybe take a look at those if it's in part of this course that you are in. I'm going to be attaching this video to all my courses, so it's going to depend on which course you are in. If you ever had any questions, though, you can always send me a message. Then we're going to do the same here in terms of bolding this. All right. So next thing's next. I like to, so we're going to put some totals over here. So let's do a total on, we're going to do a total across, and we're going to do a total up and down through the columns as well. So again, make this look a little bit more professional. I'm highlighting there. Going to give this a color. Let's just give it kind of a blue. And the other thing I like to do, so for totals, I like to put, some borders so that we see it. Now the classic accounting border is a top single line and a double bottom border. So we'll do that. So there you go. It's a thin line and then two thin lines on the bottom. Now I'm also going to put a vertical line here on the left of this. So if we drop this down, left border, so that kind of separates that. And hey, why not? Let's do it here as well. Perfect. And why not, since we're doing things crazy, let's go with, let's put a thick border around the top. Perfect. I like the look of that. You could add more borders there. You could separate each column. I think you get the point. So we need to do some totals with formulas. Formulas are one of my favorite things because there's several different ways we can do formulas. So I'm going to show you 3 different ways to go about writing the formula. So it kind of works well that we have 3 things here, and then we'll do the same across the bottom. So we need to add these 3 numbers. I'm going to show you one hint, if you will, really quick. So it won't actually put the formula in for you, but if you highlight any numbers in Excel, it down here on your bottom bar, it'll show you the average, the count, and the sum. So we know that the sum is 1895. That's a great way to cross-check different values when you put together spreadsheets. Say this was 12 months and you have formulas all over and you want to double check some of them. Just highlight a bunch of cells, make sure that that total matches whatever formula is supposed to be adding them up. So I'm going to show you the most basic way to create a formula to add up numbers. This is not the recommended way, but it is the basic way. All formulas start with an equal sign, so let's do that. And then you're individually going to say add this cell, and this cell. So we hit equals. We're going to click on this one. You see it says C3. That's that cell. We're going to hit the plus sign. We're going to click on this cell, D3, and then E3. Oops, E3. So it's literally telling Excel, hey, here's the formula. Add cells C3, D3, and E3. Hit enter, and there we go. Hey, and it's 1895. That was the number we had. Now, we could just copy this formula down, but imagine it was 12 months. That gets a little bit tedious, or even worse. Imagine we were adding up a column that way, and it's a column of 2,000 numbers. This would not be the right way to go about it. So next way is we're going to use, under the formulas bar, there's something called auto sum. So if you put your cursor somewhere, and there's numbers around it, it's going to guess what you want to add up. So hit it and see what it does. So right off the bat, it guessed wrong. It guessed it wanted us to add, vertically, which a lot of times you would be, you add in columns, probably more than you add across, but not necessarily a ton. So that is not correct. So instead, so it hasn't done a hard enter yet. It's not actually confirmed the formula. What we can do is we can just highlight the cells we actually want to add. So it's fixed it for us. Now we hit enter, and it's 630, and we see down here, 680, 680, and we are good to go. Now the third way is basically, rather than use the auto sum, is just to hard write formulas. And this is what I do. When you get to the point of just writing formulas because you know exactly what they are, that's kind of a powerful place to be in Excel. So I would literally, if I was here, I would say, okay, I want to add these 3. I would just go sum, open bracket, highlight, close bracket, done. Quick as that. So once you get the hang of some formulas, it is so simple to add these up. So now we need to do the same thing here. So again, we have our choices. We know auto sum's probably going to work pretty well here. Let's give it a try. Sure enough, that works. So we can hit enter. We could do the hard way where we add each, but we know that's not very efficient. The other thing we can do, and I'll show you another shortcut, once we have a formula, say I had to copy this across for 12 months or something. 3 months is no big deal. I could just go copy, paste, copy, paste, copy, paste. It will screw up the formatting a little bit, so I'm going to show you what to do. Go here and hit, basically you want to copy this. I use Control C to copy. Then highlight where you want to paste it, and we can paste it all the way across. This cross-reference will be the same. Now, I'm actually using a Mac, so I'm going to hold down Control and click here, and you're looking for Paste Special. What Paste Special does, and I'm going to show you another way to get to Paste Special as well. So I'm going to copy this and highlight across. On your Home tab, there's some formula-related items here. You can also do it here, Paste, and then Paste Special down here at the bottom. So you have a choice. You can come to this menu item or just essentially right click on a PC or a control click here. And what you're looking for is formulas. So what you're telling Excel before I click on it is copy that formula, copy it across to the cells I've selected, but only copy the formula. Don't copy the formatting, don't copy, well, that's pretty much it. Don't copy the formatting is your main objective here. And it's because we didn't want to lose our fancy formatting here, and we didn't want it to pick up that we had formatted this cell and move that all across, etc. So that just copies the formula. If we had different colors in here, different styles, etc., it really can mess up. If you just copy paste, it can really mess up work you've done. So for that quick extra half step of just copying the formula across, well worth it. So a few last things here to make this extra special. Let's make these dollar signs just a bit more formatting now. Here we have our numbers formatting thing. We have a shortcut to dollar signs right here. I'd say let's go with that. Also, you can come in here. You have numbers, currency, accounting. So let's just go with here. Now, it does automatically put into decimals. If you want to get rid of decimals, you have buttons here to expand and contract the decimal. So we're going to contract it to, just because we don't care. And I'm going to hit Control or Command Save just out of habit. And there we go. We have a nice looking chart. So from that initial chart, if you remember back 10 minutes ago where it was just the months and products and some random numbers, now this is a nice little chart you could show to somebody and it would, present well and you could discuss your results. Now, let's move on to, I'm going to show you how to create a chart next just because it kind of works well with this data set. So let's make a cool chart out of this. So easy ways. People, and I'll give you this, it used to be really difficult to make charts in Excel, or at least it took some steps and it wasn't always intuitive. Now it's really simple. If you have data laid out in this type of format, creating a chart is not that hard. So you think about it first, though, what do you want to chart? So I don't really need the totals. If I want kind of a bar graph is what I'm thinking for each month with the products. So either the products across the bottom and the months, each individual column, etc. We'll get to that, but we don't need the totals because the total is going to throw it off, right? I don't need product 1, July sales, August sales, September sales, and total sales in a column. No, I probably just want the 3 months. So let's highlight this. If you come to Insert on your menu, so right off the bat, here's your chart section. You could pick your type of chart, but what I like doing is if I don't have something very, very specific in mind, just go to Recommended Charts and click it. See what it thinks. And here is, I believe, exactly, and you can scroll down. It'll come up with all kinds, stacked bars, etc. So a very traditional kind of chart is probably like this one. So let's see what it did. It's a little bit big here on the screen. I'm just going to zoom out, and I'm going to do this and scroll down just a touch. There we go. So product 1, and here you have it, July, August, September. For each product, it shows you what the sales were like. So obviously, product 3 is the big seller, and it was the big seller in all 3 months. From here, you could edit the title. Just click on things. You can, name it whatever you want. Doesn't matter. I'm just showing what you can do. You could highlight different aspects. So we could delete this. Say you didn't want this here. You could delete that. You can click on individual. You saw there it only highlighted the gray ones. You can highlight an entire area, etc. So I'm not going to get into fine-tuning the chart just because I don't want this video to be ridiculously long, but you get the idea. How quick was that? You literally just highlight the numbers, hit recommended charts, picked one, bang, you have a chart. That is a great starting point to work with. So there you go. Another one you could do, I'm thinking, let's see here. I'm going to see how quickly we can do this. if it'll work. Yep, exactly what I was thinking. I was thinking a pie chart. Like, so this wouldn't work terrific with several months, several products, but when you have like one product and then several months. So you have one kind of, you're looking at one item or 1 month and then slicing that up in several ways. When you're trying to slice several products and several months, pie chart doesn't really work, but it works great for this. Product one. Okay. Product one sold terrific in September, almost 50% of the sales, or a good chunk of it at least. And actually, if you notice here, it might be small on your screen. If I leave my mouse over the gray section here, it says series product one, September value $7.98, tells you the total even, and 42%. It tells you right there what the percentage is. You can click on things, hit command, then you get a whole menu. You can change your chart type, add data, if you want to put in the percentages on here, etc. There you go, guys. All right, last thing I want to show you in this video, and then certainly if you have questions about this video, or if there's other stuff you want me to explain in Excel, send me a message. I'll try to kind of combine everybody's feedback and put it into maybe an additional video that I can add to the courses. So I'm always happy to add additional content. So I'm thinking you have a list. Let's say you want a count of the days. So let's say I'm going to put in a date here. Let's say it's 9/24/19. And it's the first day of your winter sale or something. So you're eventually going to be tracking sales over here, and your winter sale is going to go for 49 days. Total like random example here. So this will be day count, or just day. This is date, and this will be sales. And sales are whatever. I'm not as worried about the sales here, so I am going to format that just so it's clear that that is sales, and I'm going to zoom in here just because I know it's small again. So there we go, date sales. First things first, let's center this, but it's not the main point of this part of the video. So what I want to show you is, so now we have to do 49 days, and you have to set this up. Well, you don't know what the sales are going to be, but you do know the days are going to go 1, 2, 3, 4, 5. Date will be incremental as well. Well, I've seen all too often somebody literally just start typing 2, 3, 4, 5. Complete waste of time. Even worse with the date, because now you have to type 9/25, 9/26. Very simple way to do this, guys. Highlight here, go down. There's a couple ways to do this, but the way I like to do it, I actually like to pre-select. So we want 49 days, which will get us to about cell 50, or row 50, I should say. So go down to row 50. I just happen to randomly pick 49. So we have that highlighted. On your home tab, over here on the right, very discreet, is this little arrow with the arrow next to it. But the fill, it's called fill. And what you want is a series. And basically you're going to tell Excel, hey, fill this highlighted section with some stuff. Now what stuff is that going to be? Well, the series is going to be in columns because it figures that out because we already highlighted the columns. The step value is 1, which is correct. We want to go 1, 2, 3, 4. It's linear, so it's not compounding, etc. And it's not a date, so this doesn't apply. Hit OK, and look at that. So the person that was typing 1, 2, 3, 4, 5, blah, 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 blah. There you go. It's not showing here. There you go. It's just my monitor. It's not refreshing. So numbers are all there, and it went down to 49. We can do the same thing with date. I'm just going to put it right next to it. I'll just leave it there, show you how quickly this is. Same deal, column, step value 1, so 1 day. We say right here, date unit is 1. If we did weekdays or months, it would factor that in. So if we left this as column, step value of 1, date, and change it to month, it would increase the month. So it would go 9, 20, whatever, or 9/24, 10/24, 11/24, and that. But we just want the actual day. So 1 day of the month. Hit OK. Give it a second. And I either did something wrong. Oh, there it is. It's again, yeah, it's just my display. So you see 9/24, 5, 6, 7, etc. all the way down to 11/11. Turns out it's the last day. And then now you have this set up. So it took a little bit longer because I was explaining it, but you can imagine if all you had to do is type 1, the date here, highlight down, click a button or two, and this is filled. Same thing here, and now you have a ready to go chart while that other person is busy typing 10/2, 11, 10/3, etc. So, all right, guys, this video is plenty long. Hopefully you have some nuggets of information from that you can use in Excel, either from the information from this course or just in general in your life to make life more handy in Excel. Good luck with that, and hey, congratulations again on taking the course, and I look forward to seeing you in the next lecture. All right, so let's dive into the content. So First of all, just so you know, we're going to go over just sort of 3 general points you see here. Then we're going to look at a list of 5 items that we're going to dive into more specifically, all about the audit process. And then we're going to talk about obviously each of them in more depth. So this video, we're going to go over these 3 points, a summary of the 5 points, and then we'll jump into the first one as well in a little bit more depth. So first of all, there's a lot of increased audit requirements since SOX. SOX has been around now well over a decade. It's the Sarbanes-Oxley Act, if you're not familiar with it. It just put a lot more onus on public companies with their audits and audit processes and what needs to be covered by auditors. So it kind of upped the ante when it came to external auditors. The requirements are typically more demanding, not less. So it certainly didn't become any easier. There's now a lot more verification required, documentation required. Forging a good relationship with external auditors helps facilitate the process. So that's, if I was to give you an overview of what would be like one key point when it comes to external audits, form a good relationship with your auditors. I've seen it way too many times where companies just looked at auditors as sort of a pain. They don't want them there, they're a burden, and that might be true, but you still have to work with them, and they're going to be there for several weeks. So if you can encourage you and your staff to work sort of hand in hand with the auditors and solve problems. So when the auditors ask for something and say your staff can't find it, well, try to figure out where is it or who else might know. Don't just sort of delay or just say, well, we don't know where it is. Again, I've seen way too many times where employees at a company sort of drag their feet hoping the auditors will go away or they'll run out of time, and it just doesn't happen. They have requirements they need to meet. So form good relationships with them. Don't treat them as adversaries, and the process will go a whole lot smoother. So here's the 5 points we're going to go over. So just to sort of quickly address them, and then like I said, over the next few videos, we're going to talk more in depth about these. So have a clear timetable and expectations on both sides. It's almost like a project plan. Prepare your PBC list, and we'll definitely talk more about that, and be proactive about it. Know what the hot button issues will be and have the backup ready to go. So basically sort of be proactive again. Stay in communication with the audit team throughout. You don't want to sort of delay, drag your feet. And lastly, ask auditors for help. Treat them as friends, not foes. So we'll go in and talk about this first point. So have a clear timetable and expectations on both sides. So treat the audit like any other project. Just clear timeline, clear deliverables. They have certain requirements they need to meet, and I would encourage sort of an upfront meeting where you just discuss those, like from, usually a typical audit goes several weeks. So, and it might just be 2 weeks, might be 3 weeks, but discuss with them, okay, you're going to be testing accounts payable on these 3 days. You're going to be testing accounts receivable these days, and know which of their auditors is assigned to which sort of task. Typically in audit, there's several auditors there. It's not just one. Depends on the size of your company, but for a larger public company, you're probably going to have an audit manager and at least 3 to 4 sort of junior, if you will, auditors that are doing more of the testing. So know who's assigned to what, and then you can match them as well with your employees. So have a kickoff meeting, bring everyone together, and be on the same page. Have a project manager on your side. So the auditors have their lead auditor. Have someone in the accounting department that's kind of the go-to person, and whether that's you as CFO. More likely, though, you want someone like your accounting manager, someone who is more involved in the day-to-day and just has the time, and it's kind of maybe just one up from the accounting staff so they can then delegate tasks. And their job within your company is to sort of drive the audit. You want to be proactive yourself. So while oftentimes what I see is the auditors end up driving the audit. They're the ones asking the questions. They have to keep coming back. They have to say, where are you at? You haven't given me this yet. Turn the tables, and not in a bad way. Have the accounting staff be on top of it. Have them going to the auditors saying, okay, I don't have anything to do right now. Is there anything I can get for you? Is there like invoices you need proof for? A lot of times the auditors are very overwhelmed. So they might be sitting in a conference room all day, and they might have stuff they need to give to you, like tasks for you to do. They just haven't had a chance to come talk to the staff yet. So approach them and say, hey, what can I be doing for you right now? Prevent any surprises by preparing info and schedules on any unusual transactions. In advance they're going to ask. Any auditors are really good at finding sort of the unusual things. The day-to-day is easy to test. It's like those one-off transactions that maybe, your company did something that's out of the norm. They're going to ask for backup on that. They're going to want to understand it. Have all that stuff ready up front. And then lastly, make sure you know the auditor's expectation regarding thresholds, materiality, and timing. So they often will have their materiality threshold. So they'll say, we need to test anything over, $2,000, $5,000, whatever it might be. It's going to depend on your company. Know what that is, so then you kind of know in advance what they might be asking for. And then again, there are expectations as far as timing. How long are they there? Are they testing accounts payable over a 3-day period, fixed assets, etc.? They definitely have their own timetable. So rather than just kind of be subject to it, you should get advanced knowledge of it so you can work with them and get a little bit better. And just having that knowledge of their timetable, you can then schedule it into your daily schedule. Because say it's almost end of the month, let's say, and you know that the last 4 days of the month are just crazy getting ready. So you want to try to facilitate the audit so you're getting more stuff before you guys get busy at your own company. All right, so next let's talk about the next 2 items from that list. And the first one is prepare your PBC list and be proactive about it. So this is actually really, really important, and I'm not going to be able to emphasize this enough, so we're going to spend a bit of time talking about it. So first of all, a PBC list is prepared by client. So just say that again, it's prepared by client. The auditors are going to give you a list of things they want. You as the client need to put them together, and you'll provide them to the auditors once the audit starts. They will give you this list a few weeks in advance. So if they don't provide it, you want to ask for it. So essentially what they're going to do is give you a list and say, here's all the things we need to see. It's going to be lots of different things. It'll be standard things like we need an accounts receivable aging as of year end, accounts payable aging. We need, a 12-month general ledger and a trial balance. We need the financial reports, etc. They'll also have other things like any transaction over X amount, we'll need to see the backup. So they're basically giving you a heads up. Hey, just get this stuff ready in advance for us. Typically, the PBC list will be organized sort of by section. So they'll have it by cash, accounts receivable, accounts payable, fixed assets, etc. So what you want to do, and there's 2 ways to approach this. So there's either sort of the hard copy way or the soft copy way. And it all depends on your relationship. And I would suspect more companies lean towards the soft copy or digital way these days. But you essentially want to create a book or a folder, if you're doing electronically, where all the supporting documents will go. You want to be really organized. So let's just assume it's going to be a soft copy. You create a folder for the auditors called PBC list. Under that, there's subfolders, number 1, cash items, number 2, accounts receivable, number 3, fixed assets. Then within each of those, you're going to have your staff be putting documents that are backup for each of the items on the list. So say there's 5 different items under fixed assets they need to see. They need to see, any invoice for a transaction over $10,000. Well, maybe they need to create another subfolder like folders, fixed assets, and under fixed assets, fixed asset purchases over 10,000, and that's where all the invoice copies go. You want to be really well organized, and you can't be organized enough. You're essentially making it easy on yourself because you'll know exactly what you've already done and what you haven't done. And for the auditors, it just makes it so much easier for them. Imagine the flip side where you just hand them a ton of files. And I've seen companies do this, and they almost do it in a way because they almost want to penalize the auditors, for making them do so much work. That just doesn't work, and it doesn't make anything run efficiently. It's counterproductive. So what you want to do is be super organized and help the auditors, basically. So you want to get all this stuff ready. What I would also suggest, and it says here, assign the PBC list to the experts. So if one of your staff is in charge of fixed assets, they should be the person in charge of getting all the fixed asset backup. Set deadlines for your staff to include the backup. So say you got the PBC list 2 weeks in advance. Have a meeting with your staff, give them the list, assign each person specifically what they have to do, show them, the structure, how they're supposed to save it, make it blatantly clear, and then every day manage that list. Have them do a check off and say, hey, I've already done this, I've done this, and then you can go and see that information is saved in the folders. And then you want to check with people too as it gets closer. Why haven't you done these few backup items? The goal is that the day the auditors show up, day 1, first thing in the morning, you have your kickoff meeting, and you just give them the PBC list. Here's everything you asked for. That will probably keep them busy for a day or 2 while they then go through it and see what information they need to vouch, etc. The last thing you want is them to show up and they don't have anything, so they're just sitting around the first day or 2 while you're still trying to gather information. That's counterproductive. And remember, we're trying to be really productive with all of this. So the last point here, CFO should review all the PBC items and then request additional information from staff. So by the time the auditors show up, everything is assembled, everything is ready to go, everything is easy to find. So that's your PBC list. definitely encourage you, just make sure that by the time auditors show up, it is 100% complete and ready to hand to them. So next, know what hot button issues will be and have backup ready. So when there's non-traditional transactions, the auditors will definitely ask about them. That's just inevitable. Just have your backup ready. There's no sense in waiting. You already know they're going to ask about that odd fixed asset purchase, or the company leased a new building. Have the contracts ready. Have employment agreements ready for hired executives. Have any loan documents. So any type of new transaction out of the ordinary, not just sort of normal routine transactions, you might as well have it ready. You know they're going to ask for it anyways. Honestly, some of this stuff will probably be on the PBC list. They will say things like any employment agreements with key executives we need to see, any new loans, any financing arrangements. They're going to want to see it. So if the stuff hasn't already been asked for on the PBC list, get it ready for them anyways. Any variances and balances from the prior period will be asked about. If anything, just the reason why. So they will ask questions. That's part of the audit process. It's not like they do these things just to torment you or for their fun. They have specific requirements. So when they look at a financial and see that 10% increase in salaries from the previous quarter or the previous year, they're going to ask about it. So have an answer ready already. Do your homework. Now, I realize you can only do so much in advance. Like, you're already doing the PBC list. That's going to eat up a lot of time. It's not like you can do the whole audit up front. But anything that you know for sure they're going to be asking for, just be ready for it as best you can. And then lastly, all the financials will be looked at, not just the income statement. So they're going to be doing analysis on the balance sheet, the statement of cash flows, the statement of equity, and anything that stands out that's sort of an increase, a decrease, non-routine, they're definitely going to be asking about it. So just be ready for all of those things. All right, so let's go through the last 2 points from this section. So first of all is about staying in communication with the audit team throughout. If you haven't gathered already, a big part of this is communication and then facilitating things and managing people. So auditors tend to accumulate their questions and then they'll give someone a large to-do list. So, they sit in their conference room all day, they're picking things that need to be vouched, they have questions about certain calculations, and then they'll go to you or whichever staff is in charge of the section they're working on and say, hey, I need all these things. It's better to prevent those avalanche of questions and requests by just staying in touch daily. So again, you as sort of the manager on your company side of this audit, you want to go in there. It doesn't have to be a formal meeting. Just pop in and say, hey, just want to check in. How are things going? Anything you need? Is anybody behind schedule? Is there any areas that are done? You're just trying to get a sense of where they're at. And it's not, crazy secret intel. You're just really trying to, again, facilitate this audit. Maybe one of the auditors says, you know what, I'm still waiting on a bunch of information from one of your staff members related to fixed assets. We'll just pick on fixed assets. Then you can go to that person and say, okay, what's the delay? When are you going to have it to them? Try to get to them tomorrow. Because, again, the auditors are on a schedule. So if they're behind schedule and it's your company's fault, that's not the best thing. So definitely you want to manage the audit, and a lot of it has to do with communications. As well, you can get a sense of what areas they might be digging into a little bit more. So maybe they found something, they found transactions, there was more to something than they realized. Maybe you had a complex financing that had lots of different derivatives and options attached to it, and they're really having to dig in now and figure out the valuations and accounting for that. Figure that out and see where they're at. And just, again, get a sense, are they behind schedule because of something, or is it just routine? As well, get a sense of what they're finished with. So say they're done testing fixed assets completely. Well, then you can go relay that information to the person on your staff and just say, hey, just, good job. They're done with fixed assets. It creates a sense of relief for your staff, so they're not sort of anticipating more questions when there might be none. So essentially what you want to do is keep your staff up to date on where the auditors are, and as well just keep those expectations true. Maybe they're not done with fixed assets and they say, no, we still have quite a bit of testing to do. We're going to need to pull a bunch more invoices tomorrow. You can let your staff know that. Then they know how to manage their schedule. So say this person on your staff that's in charge of fixed assets has a lot to do tomorrow, just normal work. Well, they now need to kind of figure it out. Or maybe you can work with them and figure out how to balance their workload between the audit and their normal job. So last point, ask auditors for help. They are your friends, not your foes. So the common mentality, and I see this almost every company, is that the auditors are there to ruin your week. They go in, the accounting staff automatically just has it out for them. They're going to drag their feet. They're going to make it difficult. They don't want to explain things. Again, this isn't helping anyone. Ultimately, everything needs to get done. So the auditors are just following standard audit procedures. They aren't doing this because they want to torture you. They have certain things they need to calculate. They need to vouch. They need to see the backup. They need to ask questions. They need to understand why a variance was, etc. So they play by the book and question everything and expect to have to explain and justify any non-routine accounting. I mean, that's just going to be how it is. So again, you have an odd financing event happen and there's other things attached to it, options, derivatives. Those things have to be explained. And I'm just using that as an example. The odd, non-routine transactions could be almost anything. So your best strategy is to befriend the auditors. Work with them, not against them. And I hope you're really getting that sense now from me. You want to, look for their advice on complex accounting transactions in advance. So the auditors aren't allowed to do the accounting for you. You can't go to them and say, look, we don't even know how to do this. Can you just do it for us and we'll book it? They're not allowed to do that. But what they can do is they can give you guidance. They can point you in the right direction. They can say, well, here's what I think you should do, or here's the accounting policies you should look up that would apply to this. Here's what another client did in this situation. They can answer in that sort of way. So aside from just doing it for you, they can help you out quite a bit. So you want to solicit their help. And again, so say you do have an odd accounting transaction and it's before year end, get their advice beforehand. And so that way when they show up, it's already booked the way that they would have wanted it to be booked. So, but again, if you don't do that in advance, then still you want to work hand in hand with them. Be their friends and not their foes, and you'll find that your audit just goes completely differently and far much more smoothly. All right, so now that we kind of have some overall strategy on what we should be doing with our year-end audit, let's talk about an action plan. Just 10 things you definitely want to be doing when it comes to your year-end audit. And some of this might be repetition from the previous videos, but if anything, definitely do these 10 things. So first of all, be prepared for your audit with that PBC list. I can't say it enough. Have it ready to go. When the auditors show up, you want every single item on that list ready to go. You want it organized as well. Keep that in mind. So whether it's soft copy or hard copy, have it not like they most likely provide you a numbered list. So number your items the same way so it corresponds with their list. Second, determine who the go-to staff will be to handle majority of audit questions. So depending on the size of your company, the scope of the audit, maybe you just have one person who's sort of the main go-to person, and whether that's you or that's your accounting manager or a controller, etc. Let them kind of be the go-to person and almost act as sort of Grand Central Station, if you will. The auditor should really go to them to ask questions, and then that person can then farm it out to the appropriate accounting staff. Otherwise, you just have auditors going to different accountants. They might be monopolizing somebody's time when they shouldn't be, etc. So clear people's schedules for the duration of the audit as necessary. It's definitely going to be a time burden on your staff. And you want to make sure that they have the appropriate time to do this. You don't want people stressed out or feeling like they have to work, 20-hour days or anything like that. The auditors already tend to be high-stress people just because they tend to work very long hours. So try to mitigate that impact on your staff. And again, if you can free up 1-2 accounting people in your department to handle the audit, all the better, because then that's their sole job for the most part during the course of the audit. Or as well, say you let people work, half the day is on their own tasks, half the day is on the audit, and set clear expectations for people. So always schedule a kickoff meeting with the auditors. Don't let them come in and just sort of go guns blazing, start asking questions. Typically, you come in, you have a meeting between you, maybe whoever the main person on your side is that's going to be facilitating the audit, and their audit manager and their audit staff. Hand over that PBC list during that meeting. Here's everything. Typically, the first day, 2 days, you might not hear much from the auditors. They're busy going through all that stuff documents that you provided them. And it's not like you're just providing them a few things. Part of the PBC list is just lots of documentation, lots of different reports, schedules, everything they need up front as much as they can. So They're going to take a little bit of time to go through it, so you definitely want to give it to them in that kickoff meeting. And the kickoff meeting, you're able to discuss things like, okay, what's the timing of the audit? When do you need to be done? Who's in charge of testing accounts payable, accounts receivable, etc. So you can start to, firm out tasks. Is there anything we can get for you right now? Those types of things. Have daily updates with the audit lead. So there's usually an audit lead or an audit manager on site. Have a daily update, and whether it's scheduled or you just pop into their office at 4 p.m. and say, hey, how's it going? Like, let's hash it out. Is there anything you're missing? Is anybody dragging their feet on my side? Is there any issues? Is there anything extra you need? How's the schedule looking? All those things. You just want to make sure, again, you're project managing this basically. Number 6, when problems arrive, be proactive and correct them. There's always going to be some issues. They run into transactions that they don't completely understand. They need more backup. They need a better understanding. Maybe they need to talk to somebody else outside of accounting. Help facilitate that. You want to, again, make things work as smoothly as possible. So when those problems arise, be proactive to correct them and keep the audit moving along. So number 7, build a relationship with the auditors and treat them as humans. Again, it is so easy, and I've seen it almost all the time, where companies just treat them as adversaries. They treat them poorly. They don't want to bother to give them the information. They drag their feet. They wait to the last minute. You're just creating a stressful environment for both the auditors and for your company. Instead, work with them. You know what the task is and what things have to be done. So work with them. I mean, it's not fun for anybody. Believe me, it's not fun for them going into a company and being treated poorly and also having a ton of work to do and having to work 12-hour days. So give them a bit of sympathy, and they will give it back to you as well. Number 8, when you're unclear on a question or a proposed adjustment, just ask for clarification. Oftentimes I'll see that where they say, well, we don't think you booked this right. Here's what you need to do to fix it. And actually at the end of the audit, what they'll do is they will give you a proposed sort of adjustments list. And that's your time to sort of go through and ask questions and say, okay, well, what's this for? And you can agree or not agree with them. If you don't completely understand it, though, you obviously want more clarification. They don't get to come in and just sort of tell you what to do either. They need good reasoning for why they want to book a certain transaction. Number 9, note the auditors aren't always right, and sometimes you know best. So again, like you might be in a very unique business, and that transaction was just very out of the ordinary, and maybe you already did accounting research and you booked it a certain way. And they come in and maybe they're not as familiar with it either, but they propose what they think is right. It's not necessarily right. So you kind of have to work on that together with them and come to a conclusion, because ultimately at the end of the day, you both have to agree on what will actually be booked and how it will be presented. But I am just saying that the auditors don't always get sort of the final say. I mean, you might have a valid reason for booking something one way. And number 10, document any lessons learned or items relevant to your next quarter. So you go through the audit and maybe you realize, they really, it takes a lot more work than we anticipated. So next quarter, we need to make sure that we, allocate a little bit more time to the audit, or, they really dig in on our derivatives. So we need to make sure that we have every single document ready for derivatives. Whatever it might be, just anything you learn through this audit process, make it a learning experience. Document that and use that information for your next audit. All right, so in the next 3 videos, we're going to look at 3 case studies, companies where I was involved in the audits as well, so firsthand experience. So we'll definitely get a sort of a survey of well-run and not so well-run company audits. So the first one is a public company, and they're all, I can't say who they are, obviously. There's their annual audit, and there's a well-run example. So this was a 400-person plus employee utility company. It was publicly traded. Is in the United States, I can tell you that much. So big company. They covered, we're talking multiple states, several field offices, big accounting department, etc. The assistant controller was in charge of facilitating the audit. So rather than the controller or the CFO being in charge, it was the assistant controller's job to basically be project manager, if you want, on this task. They delegated to the accounting manager to work with auditors on making sure they were getting the backup and the answers they needed from the accounting staff of 8 people. So again, it's kind of project management. The assistant controller is making sure the whole project or audit runs well, if you will. And then the accounting manager worked a little bit more directly with the auditors, and then they also would then facilitate with the accounting staff of 8 people the specific items that they needed. Each accounting staff member was in charge of specific areas of the audit and providing information to the auditors. So this company was big enough, so so one of those people was in charge of fixed assets, and their entire job was just managing fixed assets. You can imagine that a utility company, fixed assets is a big part of their balance sheet. So they have lots of piping and whatnot underground. They have service trucks, they have tools, equipment, so and constantly adding new things as well. They have buildings out there, all those field offices. So quite a bit of fixed assets that needed to be managed, depreciated properly, etc. So just as an example, there were specific accountants in the company responsible for specific areas. Like you had someone whose only job was accounts payable. They would be in charge of answering all the accounts payable questions. And essentially, because it was so delegated, and these people kind of basically followed all the best practices we've gone through in the course so far. They really were on top of it. So I can tell you the assistant controller and the accounting manager both very much A-type personalities, proactive, getting those daily updates from the auditors. When something wasn't being done, going to the accounting staff and saying, okay, when is this going to get done? We need this done like by tomorrow. And also making sure that the normal accounting day-to-day was being handled properly as well. So because of all that, the audit was always on time, it was complete, and it was smooth. So there's no issues. So when you put in that little bit of effort to make sure everything runs well, you'll find that it pays off tenfold just in the audit getting done, no problems and on time. Okay, so let's talk about case study number 2. So this is a public company. Its annual audit, it was not run very well. So let's see what went wrong with this company. So it was a 150 plus employee software company, another publicly traded company in the United States. The CFO was in charge of facilitating the audit. So the CEO and the CFO looked at the auditors as wasting employee time. They questioned everything they did. So the auditors would ask, for backup on something rather than try to make it happen, facilitate it. Instead, they'd be like, well, why do you need to see that? Do you really have to? That's just a routine transaction. So they basically just, it was like pulling teeth, if you will, that old analogy. They just made it really difficult for the auditors. So again, then that just breeds an atmosphere where it's very adversarial. The auditors are then not wanting to work with these people, and it's just dragging the audit on longer than it needed to be. The PBC list, so prepared by client list, was only half complete, and they decided to let the auditors ask for the backup as needed. So again, they just basically put it on the auditors to made it difficult for them. Then basically just said, forget this list. Here's some of it. Whatever you need, just come and ask us for it, and we'll get it for you. So again, as compared to the previous example, so rather than having a PBC list all nice, complete up front, handing them all the information they asked for, and basically getting a nice jump start on the audit, instead they dragged their feet, made it difficult, and then you're already sort of putting the auditors behind a few days by not giving them the information that they needed up front that they've already asked you for. As it says, created an adversarial relationship. And it created a burden on the accounting staff for trying to get auditors back up on the fly. And the audit often ran late. So essentially what happens then is, because you've created this sort of poor environment for the auditors to work in, now they're just coming around asking all the accounting staff like, hey, we need backup, we need copies of invoices, all things that could have been done in advance. But now because of whatever, the timing, now your accounting staff can't, sort of plan their day. They're constantly getting, asked questions, asked for backup, having to do things. People are under stress on both sides. And you can just see how it almost snowballs into just a horrible condition, if you will. Definitely not a fun environment to work in. Again, this was one I was involved in. And just completely run differently than the previous case study. So definitely, because of that sort of snowball effect and the fact that things just get worse and worse if you just don't sort of facilitate and play ball with the auditors, if you will. I really encourage you to manage that audit and run it smoothly and be proactive, as opposed to sort of how this audit was run. All right, so case study number 3, a little bit different. A startup company, a startup venture, and their annual audit. So it's a startup venture in the healthcare field, only about 8 employees. It's their second year of operations, and they're recently funded. So they obviously have some transactions the auditors are going to be interested in, all about that funding. But at the same time, they probably don't have a lot of revenue and whatnot to test. So audit was fairly light, as there wasn't too many transactions. So it really focused more on policy and procedures. The auditors want to make sure that the groundwork was laid so that as the company grew, things would be done properly. Making sure things like revenue recognition policies were in place, cost of goods sold, all those things that the accounting staff knew, how to properly handle transactions that might be coming up, especially when it comes to the funding, which the next point is. Also, the large equity focus with the incoming capital, issuance of private stock, they're issuing options, warrants, etc. So if you're not familiar with those, they definitely create a lot of accounting work, if you will. I wouldn't say issues, but there's definitely specific accounting and recognition that goes into those things. So how do you value an option or a warrant? The auditors want to see the backup for them. How long are they for? Who were they issued to? When do they expire? And then depending on all those factors, they have to be valued a certain way, and there's only certain valuation techniques that are allowed to be used. So a lot really goes into it. As easy as it is for a company to just issue, say, options to, say, the staff or to investors, it becomes a whole other game when you have to then value those options and what's the true, value of them that should be recorded on your books. And then as well, just the incoming capital and, the issuance of that stock and what's the par value and what's it worth and how should it be recorded. So lots of considerations go into startup company around sort of the capitalization. So the CFO worked with the auditors to ensure transactions were recorded properly from the beginning, pre-audit. So again, the auditors didn't want to show up. And actually, to be fully clear, this company had experience with these auditors before. This was actually a second company that was started by this CEO and team. So they'd worked with these auditors before. So the auditors were familiar with them and felt comfortable and in advance said, okay, well, as you bring in capital, let's work together and make sure that the transaction is done correctly. So I mentioned in an earlier video where auditors can't tell you exactly what to book. You can't hand them a transaction and say, give me the journal entries. But what they can do is guide you. They can give you, say, point you in the right direction, like use this accounting policy, determine what the accounting should be, propose an entry. And they'll even go that far. They'll say, you tell us what you'd like to book, and then we can tell you, yes, that's good, or maybe you should do something else. So always good to have that relationship with your auditors. So overall, the audit would go smoothly with these guys. And, as auditors had helped in advance, again, the company made sure they were set up properly for the audit and were booking everything correctly. All right, so next, let's go through some facts. It's basically question and answers. These are often questions that come up regarding audits. People may be not familiar with them. And some common ones that come up. So let's just go through these. So first of all, auditors are determined to find errors. That's often how it feels. I mean, you're just constantly asked questions. And why did you do it this way? Why was it booked this way? What accounting regulations did you follow? They're not looking for errors, but they want to make sure that everything is done correctly. And auditors obviously have a lot of experience, so they're pretty good at finding areas where you maybe did something incorrectly. So it's not so much that they're seeking it out on purpose. It's just almost a natural ability, if you will, for the auditor. And again, you don't need to take it personally. They're really just, at the end of the day, they want to make sure everything is booked correctly and that they can sign off on it. Second, audit proposed adjustments must be accepted. So I mentioned in one of the other videos, towards the end of the audit, once they've kind of gone through everything, they'll have a list of proposed adjustments. They'll say, we found, these few things wrong, or maybe these lots of things wrong. Here's the entries we propose the company make in order to make everything good. And then you can obviously sit down, discuss them with the auditor. And if you don't agree with them, certainly you can say, well, we don't agree with it, but you would have to have your own reason. You can't just not book something because you don't like it. You'd have to have a good reason as to why something shouldn't be booked that they're proposing. Typically, though, the things I would say 9 times out of 10 in my experience, the things they find were true errors and should most likely be booked. But again, you don't want to just accept them at face value. You want to make sure you understand what they are and why it needs to be booked. So number 3, auditors don't know your business as well as you do. Somewhat true. I mean, obviously you are there day to day and in the ins and outs, especially if this is a new audit firm that's working with you. So, they can only go off their own experiences and off of accounting regulations. So if you do have some sort of specific, industry niche, some transactions that are sort of different and they might not be accustomed to, that's certainly where there might be some differences when it comes to accounting policy or what they think should be booked versus what you did. So, and that just leads to a discussion. It doesn't necessarily have to be a bad thing. Number 4, it's better to not disclose information than bring it to their attention. So say, you kind of know something got booked wrong, and you just don't want to fix it because, you're almost at the end of your audit. They didn't pick up on it. You know that if you point it out now, it's going to mean changing all the financials. They're going to have to retest things. The best thing, though, is to disclose it to them. You obviously don't want to hide any information from the auditors. The sooner you can fix problems, the better. And quite honestly, they might find it the next period. So now it almost makes the problem worse because now you have to go back to the prior period and make adjustments. And that never looks good on your financial statements or to your investors. So always sort of disclose information to the auditors, even if it's something you did wrong. There's no shame in that. They're more worried about getting things fixed and correct. Number 5, overwhelm the auditors with information will make it appear you know best. So one sort of strategy, if you want to call it that I've seen companies do is almost the opposite of dragging their feet and not providing information. They'll just give the information, they'll overwhelm the auditors. They'll just try to give them as much as they can so that they have to sort of sort through it and figure out, what to do with the information. And that's not a great strategy either. You're just wasting their time when you know exactly what they probably do need. So my suggestion would be to, again, sort of create that camaraderie and work with the auditors, not try to either overwhelm them or underwhelm them. So how long does a typical audit take? So the year-end audits, again, it's going to depend on the size of your company and how much transactions you have. It could be a week. I would say at most 3 weeks would be sort of a larger scale audit for a bigger company. Possibly more. If we're talking like huge, multinational corporation, could be more. But sort of your standard, say, public company with a couple hundred employees, usually the field work is, I would say, 2 weeks, and then there might be a week of, off site where they're at their offices working. Why do auditors find transactions they want treated differently? Or why they often find those. I wouldn't necessarily say it's often. It really has to do with you and your company and how you book things. So if you're doing things sort of by the accounting policies, they're not going to find those things. But if you sort of haphazardly book things or you have complex transactions, that's oftentimes where, you get in there, you book a transaction a certain way, and then they come in and they might have a better or a suggestion on how it should be booked. Why does it take 3 to 4 auditors to do the annual review? So the way they work is they will allocate specific areas to each auditor. So one auditor is in charge of accounts receivable, accounts payable, and fixed assets. Another one's in charge of testing revenues and cost of goods sold. Another one's in charge of, reviewing the MD&A part of your 10K. So there's more to just the financials. There's also the entire, financial reports and the footnotes and the 10K that go along with all that, which we haven't touched on much. We've really focused on more of the actual accounting numbers and the audit part of it, but there's still all this sort of then leads to the reporting side of it. So there's lots to do. So that's why they will typically have 3 to 4 auditors out there. What leniency does the staff level auditor have? Probably not much. I mean, they need to play by the book. They need to ask questions, and ultimately all of their work ends up getting reviewed by the lead auditor, or the partner. So even after they do their job, they're still gonna. So if say they let you slide, they just said, you know what, don't worry about it. Don't bother providing backup for that transaction. Well, their boss is going to ask for it, so they have to kind of be tough on you. So they don't have a lot of leniency, quite honestly. And lastly, what's the auditor's approach to reviewing financials in general? They really just take an analytical view. They're looking for changes. So they're comparing previous periods to the current period and saying, well, what were the big jumps or the big changes? Why did salaries go up? Why did they go down? Why did taxes go up? All those questions come up. They have their own software they use. They plug in like your trial balance. They compare it to the previous period. And it's almost auto-generated as to what they then need to test and how deep they have to go. So there you go. That's 10 sort of questions that come up about the audit. Hopefully that's shed a little bit more light about the process. And hopefully you're getting to the point that, they're really not out to make your life difficult. It's just the nature of, they have a job to do. And their job, unfortunately, is asking a lot of questions, digging into your transactions, seeing if things were done correctly. All right, in this video, I just want to show you a PBC list just because, we've talked so much about them, and, if you haven't seen one, it might still just be a bit of a mystery. So this one's rather old as the example I have. This is an actual prepared by client list that was given to a company, at least as part of it. This isn't the entire thing, but just to give you an idea. So to look down this, again, provided by the auditors to the client. So audit schedules, miscellaneous. So this wasn't even specific things by, topic, if you will, like cash or accounts receivable. So a trial balance as of, last year and this year in Excel format. So they ask specifically general ledger detail for the year ended. So they want to be able to go through and pick out transactions. Provide internal financial statements for each annual period since inception. Please provide an analysis for current cash flow projections. Please provide any licensing agreement, revenue share agreements, customer contracts, advertising agreements, etc. So we talked about how they would ask for, any sort of big agreements. That's one of them. I don't know if it's on here, but they'll ask for management resumes and leases. So let's see, articles and corporations and bylaws. So in effect, so they really dig in and look at quite a bit if you get the idea here. Provide copies of all share purchase agreements and rounds of common preferred stock. Provide any notes payable, convertible debt, bridge loans, and its inception. So it's not even just the current and new ones, it's anything that they've entered into since the beginning. Oftentimes companies, this is where sometimes companies get a little fussy because, they'll say, well, we already gave you, like last year we gave you copies of agreements we already had in place, so why would we have to do that again? So, and that's one thing you can work with the auditors and just say, you should already have this. One thing worth mentioning is auditors often keep just sort of a record of things, or a book, if you will, of these types of agreements, so they can then go back to sort of the history files and say, okay, we already have this. But that doesn't stop them from asking for it again. So provide a summary of all outstanding warrants, stock repurchase agreements, etc. Provide summary of all acquisitions, intellectual property, business combinations, mergers, etc. And then lease agreements, contracts, other corporate documents, including employment agreements. There it is right there. So you see they ask for quite a bit of information. And keep in mind, this is just a small piece of the PBC list. One thing I do want to point out here, so they have their list. This is in Excel, I would say. Over here you have notes. So this is where your company can then make little notes. And who. So who's in charge of providing this information? This is where you would delegate and say, okay, well, Bob's in charge of providing these 3 things, and Sally's in charge of providing these 3 things, and George these 3, so you allocate it out. So everybody has a job to run different things and go get that information. You could see and also hopefully appreciate some of these things aren't always going to be easy. You work for a large company and they're asking for the articles of incorporations and bylaws. You're someone just in the accounting department. You have no idea, where do I go for this? Like, who do I even ask? So a lot of times that's where some of the confusion comes from. People just sort of drag their feet. They're like, I don't want to do this. I have no idea what to do or where to go. And that's kind of the wrong approach to take. You really do want to make sure you're proactive. Go ask the question, or tell the person you're reporting to, hey, I don't know where to get this. Or as maybe the audit, if you're the audit manager on your company side, go to the auditors and say, don't you have this from the previous year? And maybe they do. So you'll easily be able to sort of solve that one and not have to worry about it just by asking them if they maybe already have it. All right, so that is it for the course. I hope you've learned lots about how to manage a financial audit a little bit better. Definitely feel like there's some key points in there, such as really being proactive with the auditors, forming sort of a companionship and working with them, not against them, and managing your team as well. And it's definitely a big task. It really is a project in itself that lasts several weeks. But if you run it well, it'll happen smoothly. You'll get through it, and you can move on then to the back to your sort of normal day-to-day sort of accounting and finance functions. So just as a conclusion to wrap up, you want to create that win-win relationship with your external auditors. Preparation is key to a smooth audit. Get that PBC list done, make sure everything is done, give it to them, and be on top of the auditors to make sure they're getting the information they need and that they're asking questions proactively as well. And then lastly, know what the key points of interest will be and have the support ready. So you can help yourself basically through the audit process just by being proactive, making things happen, facilitate it, and then again, like it says, keep any sort of key points, have that information ready. They're going to ask about things like new financing agreements. They're going to ask things like options and warrants that were issued and how did you value them. So just be prepared for all that and have your staff prepared for it. And in the end, you'll have a successful financial audit. You'll go through it, you'll get your audit letter, and all will be good. So with that, I appreciate you taking the course. Take your time to send me a review, send me any comments, any questions through the course. Definitely, they'll love it when you leave reviews for the course. Really appreciate it. Definitely as well, I encourage you to check out any other courses I have. I've quite a few courses up related to entrepreneurship, accounting, finance, funding, all things sort of small business related. So definitely would love to help be your instructor on some of those other courses as well. And that is it for me. I'm Chris Benjamin. Thanks, everybody, for taking the course. Hello, everyone. It is Chris Benjamin here, your favorite instructor. I want to put together a little presentation. This is going to all my courses, since most of my courses have to do with entrepreneurship and business. I want to create a presentation talking about 2021. Looking ahead, I'm recording this in November 2020. So let's see what's ahead in the world of entrepreneurship. So first, before we get to kind of the trends, I have about 9 or 10 trends to look for. A few statistics first of all. This was based on a survey. It was conducted in the United States, and it was conducted, I would say, about mid-year. So just keep that in mind when thinking about these stats. And one thing I will mention too before we go over this slide in particular really quick is that the responders were able to select multiple reasons. So if you add up the percentages, they're obviously more than 100%, and that is the reason why. So why did entrepreneurs fail as described by entrepreneurs? 42% said there was just no market for their product. So what that tells me is entrepreneurs are jumping in. They think they have a great product or service. They start charging ahead. They start building it. They start making it. And then they realize nobody wants it. Big problem in the entrepreneurial community. It has been for the last 10 and 20 years. You need to make sure that there is an actual market for your product before you start. Entrepreneurs oftentimes have rose-colored glasses on with the world. They think everybody on earth is going to want whatever it is that they are making. And that is just not the case. You need to be aware of what your actual market is. 29% cited that they ran out of capital. Undercapitalization, another huge problem. You know, you're well on your way and you just run out of money. There's always cost overruns. There's always time delays. It always takes more people than you think it was going to take. You have to spend more in marketing than you thought, and the list goes on. So you want to make sure you are properly capitalized when you start your company. 23% said a lack of capable team. Basically, again, a lot of times entrepreneurs jump in, they have a great idea, they think they're going to get started, maybe they have a few friends or they hire a few people, but as you can see, 23% said they failed because they just didn't have a capable team. There's no such thing, I personally don't believe, as sort of a CEO who can wear all the hats. You know, they're the product genius, the marketing genius, the accounting genius. You're just not capable of doing all those things all at once. And unfortunately, a lot of times entrepreneurs think they can handle everything, or they can just hire a few friends and take care of it. It'll get done. Reality is that's just not how it works. You need to have the proper people in place. 19% said competitor. Basically, somebody else came out with a better product. They were quicker to the market. Somebody beat them to the punch, basically, and or just did it better. And 18% cited cost increases more than expected. That's kind of goes hand in hand with ran out of capital. They essentially they didn't do their homework up front, and they didn't add in enough buffer to adequately cover situations like this. So, and then the footnote at the bottom, note that they could choose multiple reasons. So just something to keep in mind. I mean, honestly, guys, I've been doing this for over 20 years. These reasons don't change. So, don't think you're going to be the one who bucks the market and can, go ahead with a slim capital budget, or the one who can get away with not having a capable team. You need all the pieces of the puzzle here. Statistics don't lie. All right, next, let's just look at some age demographics, and then I believe after this slide, we'll actually get to sort of the trends that are coming up for 2021. This stuff I found really interesting, though, and that's why I wanted to share it. So before we get to the demographics, I would suggest that the common kind of idea or misconception about entrepreneurs is they're younger, they're people who maybe decided not to go into college, they decide to go the entrepreneur route, maybe even teenagers, etc. But definitely I think the idea is skewed that entrepreneurs are sort of a younger generation. And I think you'll find here is the stats tell a different story, and I think that there's a few reasons behind this. But let's just look at them really quick. So 18 to 29, only 4%. Not, I would think most people would be expecting to see like 30, 40, 50%. No, 4%. 30 to 39, 14%. 40 to 49, 25%. And 50 to 59, 35%. And then 60, 69, 18, and 70, over 74%. So the big, the bell curve here is really it's people between 40 and 60 who make up 60% of the sort of age base of your entrepreneur. Now, you might be saying, that doesn't seem right, that, whatnot. I'll give a few sort of insights into this. I think there's a few dynamics here. One, keep in mind this was done mid 2020, so mid pandemic. A lot of people have lost their jobs. They are, probably forced into a world of entrepreneurship. So you might have people who responded who now sort of label themselves as an entrepreneur, but maybe they're new to the world of entrepreneurship. These aren't necessarily people who, have been doing it for 5 years or have a business ready to launch. They're just people who kind of self-label themselves as entrepreneurs. So keep that in mind. Two, I think over time the stereotype of the young entrepreneur really has shifted. I can speak from personal experience and meeting with entrepreneurs. I've gone to several sort of meetups around the San Diego area. The demographic over the last 10, 15 years really honestly has changed. Now, again, I'm basing it just on my own personal experience. That's not necessarily a reflection of the entire world. But that said, I will say maybe, 2005, 2010, the demographic was much younger, people in their 20s. Now, when you go to a meetup, it's people from all generations. It truly is. So you're seeing more and more people. And again, I would say in that 40 to 60 age group, what people are realizing is either they're forced out of their jobs, like things like pandemic, or they're just people who got tired of the corporate life. They decided to move on and move into being an entrepreneur. And I would say a third reason too is this is an age group that is far better capitalized. Like one of our reasons on the previous slide was undercapitalization, right? These are people who have built up capital. They probably have money to invest in their business. They don't need to find outside investors. So you're going to see a shift towards that age group. All right, guys, moving on. So let's get into some trends now for 2021. So digital nomad / work from home. So there's several factors at play here. Again, the pandemic kind of shades like a lot of these answers, I would guess. But the pandemic kind of forced people to work from home. So now it's people who maybe were on the fence of like, should I work from home? Should I work at an office? Or forced to work from home? Think of somebody starting a new business. Let's say you were already planning on starting a new business. You're going to start up some tech company, whatever the case might be. You were assuming you would go the traditional route of renting office space and having employees, etc. And now that just doesn't make sense. Like you're going to have a hard time getting anyone to come to the office. It wouldn't be safe, etc. So you're kind of forced into this work at home situation. Two, people, once they kind of got into it, they realized that it's not so bad. There's a lot of cost savings from working at home. You don't have that huge overhead. When you're a startup, you need to be like lean on your costs all around. So anyone who was kind of maybe against the idea of working from home, kind of forced into it and saw that, hey, it's not so bad. The benefits, the global workforce. So I would say, my own observation is when companies tend to have an office and have a local staff base, they tend to just have that. They don't really look outside of the local market. When companies are forced to work remotely, work from home, then the world's their oyster. All of a sudden they realize, well, we don't just need people from our city. We could really look at people anywhere, the United States, around the world. So it really opens up this global workforce. And then people seeking alternatives outside the U.S. So this is kind of the nomad part of it. You're starting to see a bit of a trend. I wouldn't say it's like the hottest thing, but it's what you're starting to see is entrepreneurs themselves. So besides working from home, they're realizing I could really work anywhere in the world with what I'm doing. So they're starting to look for, one, where would be a cheaper place to live? A lot that I've seen entrepreneurs talk about, Thailand, Bali, great tropical type of destinations, cheap cost of living, cheap places to run a company. And second, entrepreneurs are looking at it as an opportunity to travel. So whether it's the young entrepreneurs who are like, well, I could see the world and be working on my business, or it's that sort of older generation, if you will, who's like, well, I've spent my whole life in the corporate world. Now I'm free. I'm this entrepreneur. Why not use this opportunity to both travel and start my company? So it's kind of a few things that work there. And you'll only see this trend grow and grow. Again, pandemic, helped enable the work from home kind of movement, even more so than it was, but also deterred people from traveling and getting out, etc. So what I do think you'll see is as the pandemic kind of eases up and goes away, all those people who were wanting to travel now will be able to as well. So there'll be even more focus on being this sort of digital nomad. Global business and the workforce. So this kind of ties in a little bit to what I was mentioning. This has just grown. I mean, we've heard about, the global economy, et cetera, for a long time. It's just sort of slowly growing, if you will. It's grown over the last 10 years, tapping into experience and expertise from around the world. Also just a global marketplace, a marketplace for products and services, which leads to needing experts worldwide. If you're trying to sell a product in multiple countries and maybe countries you've never been to, it really helps if you have somebody who works for you from that country. So again, it leads to that kind of global workforce. And then cost savings of cheaper labor forces in other countries. I mean, it's no mystery. It's no surprise. It's no hidden secret. The cost of labor in the United States is probably going to be pretty much, the highest or very near the highest that you could incur. So when you start looking at positions that you could outsource to other countries and the cost savings it'll benefit you, you could hire 3 programmers for the price of 1 if you used a different country. It really starts to click, and you see companies say, okay, yeah, we really need to expand our workforce. So that trend has continued and will only continue to continue on. Social commerce. So this is fairly new phenomenon, not necessarily the last 6 months or anything, but definitely in the last, definitely the last 5 years, if not the last 3 years, and it's picking up steam. So a couple ways to look at this. So things like Facebook Marketplace, various buy and sell groups, they're self-selecting and finding people to buy and sell with. Neighborhood apps like Nextdoor. I mean, you might not, this is again a US specific one, but basically it's an app where all neighbors can connect. It's like a Facebook for your neighborhood essentially. Apps, again, these are US based, but you probably have something similar where you live. Apps like Letgo, Macari, Poshmark, and there's about 15 others as well. Basically, anyone can sign up for an account. It's typically mobile based, like you use your phone, you take some pictures of whatever you want to sell, you write a little description, and boom, off you are and running. It's a lot quicker and easier than something like an eBay. It just takes, like in 2 minutes, you could have something up for sale. So now all of these, you might be thinking, these really tailor to an individual selling. You as a person want to sell some stuff you have laying around the house. I wrote kind of a virtual garage sale. The thing is, though, with these, as a business, you can typically advertise as well, and you can advertise your product in line with individual sellers. So I'm going to use Facebook Marketplace as an example. Let's say you sell whatever, some type of clothing. I'm going to use clothing. You're a fashion designer. You have your own line of clothing as kind of the generic example we'll use through this presentation. You have your own specific clothing line you've designed. You could pay for ads on Facebook that will basically run in line with other people. So other people may be selling, sweatshirts and jeans, etc., that are just used. Your ads will show up in there as well as an individual seller, and people can be redirected to your site or whatever form you use to sell. So social commerce as a method to sell your actual business products that you're selling. Now, the gig economy. Now, I have a lot of thoughts on this. I'm not going to dwell on them too much, but I've kind of written it out here a little bit, and let's talk through this. So, gig economy, just before we go through the points, basically, people kind of taking gigs, if you will, short-term employment opportunities to do a project, do work, and get paid. So it really is do a job, get paid type of thing. Now, I mentioned here in the very first line, I'm personally not a huge fan of this as a business model long-term for people. And I'm going to explain that in a few. I'm not talking about the business model of the actual companies like an Uber or Lyft, etc. I'm talking more about the actual people doing it and using it as kind of an avenue to being an entrepreneur. So I mentioned like things like Uber, Lyft, Uber Eats, Postmates. So, kind of driving, ride share, food delivery is usually what comes to mind when you think of the gig economy. There are other gig economy stuff, like, for example, just providing a service, being a for hired, hired gun type of like a freelance writer, you do projects, etc. Those would also be gig economy. I would classify as gig economy. You're doing a gig, you're doing a project, you're doing some work for somebody else, and it's kind of a one-time thing. So let's see. I also mentioned here Lime scooters. If you're not familiar with those, like kind of scooter in major cities around the U.S., we have like these scooters that you can rent and drive around and drop off. Well, there's people who charge those up, and they're paid by Lime to basically go pick them up, charge them up overnight, and then go drop them back off in locations. Very gig economy. It's work when you want to work, do as much as you want or as little as you want, and get paid for the work that you do. So I do think that the gig economy as a whole serves a great way to get into an earning situation. You're exchanging your time for pay. You can sign up to be an Uber driver relatively easy, I believe. I think you have to get your car certified or inspected, something like I honestly am not 100% sure of the details. But from anything that I've seen or researched, it's a fairly easy, way to get into it, and you can start earning immediately. And it really is, you work as much as you want. If you want to work 60 hours a week, you do so. If you only want to do 10 hours, you do so. You're going to get paid according to how much work you want to do. It's a great way to supplement income or create income. If you're in a situation where you just don't have an income, maybe you're building your business, whatever the case might be, and you look at this as an avenue to earn income, that is very true. I've driven in a lot of Ubers and Lyfts over the years. I mean, I was probably one of the first people using Uber way, way back before most people knew about it. And I always talk to the drivers, and I ask them just like, how's it going for them? How long have they been driving, Uber or Lyft for? How often they drive? Do they have any, fun stories, etc.? And I try to get a gauge on what their life is like as well. And I mean, it seems to be, again, generalization, but it's either sort of a younger generation where this is an easy way to get into an income earning situation, or it's an older generation who either lost their job and they're doing this, or they're supplementing their income. So the two stories that come to mind were a guy, I remember he picked me up in a Cadillac Escalade, the extended version, very nice, fully loaded, easily $80,000 plus vehicle. But he's driving for Uber. And I mean, you're not making like $100 an hour at Uber, let's be honest, anything like that. So, and sure enough, he is someone who had a great job and he lost it. And like he'd kind of lived beyond his means. He has this huge car payment he needs to pay for, etc. So now he's driving his Escalade around, driving for Uber. It was nice for me, but it's kind of a little bit of a sad story. Another one that came to mind was a lady picked me up in her car that was fully decked out in sort of real estate, decals and whatnot. She was a real estate agent, but business not going so great. She has to drive for Uber. She picked me up in her, the car, and they always have their ads and their phone number and their face plastered on it. I almost felt a little bit bad for her. She seemed a little down about it. Like, I have to drive Uber. I'm this real estate agent who acts like I'm, this hotshot real estate agent, but I'm driving Uber to like make ends meet. So that's where it gets to the next point here. And guys, this is where, my little rant. Long-term people will always be on the grind. Like, you will never get, I think Uber and Lyft and Uber Eats and all this gig stuff is great to earn an income, but I don't want people to think of it as their entrepreneurship dreams. You oftentimes, the entrepreneurs I've come across are always like, oh, I'm on the grind, I'm making money, I've got all these income sources. Yeah, but give it, a year, 5 years, 10 years. Do you really want to be driving Uber 10 years from now and acting like you're this great entrepreneur when really all you're ultimately doing is working for Uber and driving for them? So I just want to sway people from getting into that mindset that you're like this hotshot entrepreneur when you're driving Uber. And I'm not trying to disrespect anyone doing it, but I want you to encourage you to think about, really starting your own business. So, also, the last point here is you're subject to market fluctuations. For example, Uber and Lyft were almost like outlawed in California. So can you imagine down the road, you don't know what's going to happen on the legal front. Say somewhere like California did decide like, nope, you're not allowed to drive Uber and Lyft anymore. Like, your job's just ripped from you. That doesn't sound like an entrepreneur company that you started where it's just taken away from you. So just keep that in mind. But just to end on a positive note, and since don't worry, I'm not going to rant this long on all these slides. I do think it's a great way for people who either need an income source fairly quickly or want to be generating income while they're doing other stuff on the side as well. So going on with the trends, niche markets. So this is a trend that seems to go back and forth over the years. So the second point here, sometimes the trend tends to be something for everyone. Other times it's focus on specifics, which is kind of what it currently is. So, do you make a product that goes and appeals to a very specific niche person, target market, or do you make something that is just kind of global that hopefully everybody will like? So I make an example here in a second. So specific products for demographics, market segments, like I mentioned. So example, clothing example again. Instead of making clothes for men, for women, for children, all different shapes and sizes and patterns and styles, etc., that would be a more global sort of approach. You make clothes exclusively for urban women in their 20s. Very niche market. That is currently what the trend is. People want, products and clothes and services that are targeted directly to them as an individual. But this trend does tend to sway over the years. It has a long sort of tail. It will sway, like it might take 5 years before it sways back to more of a global effort. The reason I mention it is beware the test of time. So say you're just now getting into business, you're thinking, great, I need to like super target my niche, and that's what's hot right now. That is great. You'll do fine. The problem will be down the road when you have built this brand as being a clothing company for women, urban women in their 20s. And now all of a sudden people are looking for more, just kind of a brand that, appeals to everybody, not necessarily specific to one category. So whatever you choose to do, you kind of have to stick with it, and you have to think long term. So think down the road is ultimately kind of the point here. Subscription-based businesses. This is one that I've sort of, another one that I've witnessed over the last 10, 15 years. It's really, it has continued to grow. It will continue to grow. Long term, this does build brand loyalty. You're kind of hooked, right? So think of a Netflix. I have it as one of the examples. I can't just pay, say Netflix was a service where you paid for a year, and then once your year was done, you could choose to renew or not to renew. If you're not happy, you might say, no, I'm not spending another whatever. Say it was $150 for a year. But when it's monthly and you're paying $15 a month, it's easy to just kind of stay with it, right? So, and that's where it builds brand loyalty. They're continually adding content, etc. It's great longer term revenues. People, like I said, people sign up. I know I did. I mean, I speak from personal experience. I've been with Netflix for probably 15 years. I just pay every month. Like, even if I'm not using it, I just stick with it because I know that I like it when I do use it. And be a pain to unsubscribe, cancel my account. And then a month or two from now, they come out with some new special and I really want to see it and I have to sign up again. No, so I just stay with Netflix. They've built brand loyalty with me. Let's see, it leads to pricing as a marketing tool as well. So, you have companies competing. I wrote Netflix, but you have like a Spotify and an Apple Music, for example, competing on price, trying to offer the much they can. So keep that in mind. It is a very price competitive industry. But if you are in an area where you are offering some type of subscription, or you could charge one-time fee, subscription is the way things are leaning and have been going. So software as well. I'm just speaking from experience here. You used to buy, I don't know if, depending on how old you are, you used to actually buy Microsoft Office, which had Microsoft Word and Excel and PowerPoint, which I'm using like for this presentation, and you could use it. So say I bought Microsoft Excel and PowerPoint, Word, etc. back in 2010. I could still be using that version today. It would have been the one-time cost. I would never give another dime to Microsoft, right? Well, you can't do that anymore. I don't think you can anyways. If you can't, or if you can still, they definitely don't make it as obvious, and I'm sure it's going away. Now it's basically a annual subscription plan. I pay once a year. I believe it's $100. I get access to all this. I get all the updates for free. You don't have to pay for those. And they kind of pitch that as kind of the benefit, right? But they've also got me in the hook now. So rather than paying whatever, I don't even remember what it used to cost. I think it was like $200 for Office. I could have kept forever. Now I'm paying $100 a year. So it's kind of a subscription on a bit bigger scale. So, but it's one of those things. You need it, right? It's a tool that I use. So, as well, if you don't pay, you don't get to use it. So let's say I have all my this presentation, and I decide at the end of the year I don't want to renew Microsoft. Like, I don't use it enough. Well, I'm not going to be able to open my PowerPoint in the future. I'm going to have to pay eventually. So it's another one of those things where you just go, well, I should just pay for it. The price is right at the point where I use it enough that I need it. I don't mind the $100 a year. So I'll stick with it. So again, it kind of ropes you in. Now, Microsoft, for me personally, I use it every single day, so it's not really a question. But I could see how people would think that way. A side note, it's also giving consumers choice. So thinking of if you watch a lot of YouTube or Twitch as a good example, you'll see a lot of ads. So this is kind of a different kind of avenue here I'm talking about. But so if you go on YouTube and you watch a video, there's going to be ads, but you can pay monthly. Again, I think it's like $10 a month, and you won't get any ads. You skip all the ads. That's another way where companies are basically saying, hey, you're going to pay in one way or another. You're going to pay in your time and have to watch these ads, or you can pay a fee and not have to watch ads. So a great way that companies have kind of worked in a revenue stream. YouTube did not used to have ads way back. So All right, next point. So the use of knowledge from experienced older entrepreneurs. So thinking of the age demographics and the little talk we had, 20 minutes ago about the age demographic and kind of that bell curve, that kind of highlighted a little bit of this. So realizing that there's value in the experience and knowledge of people who've been around, companies are tapping into that market of 30-year-olds, 40-year-olds, 50-year-olds. I'm myself far more valuable now to a company than I was at age 20 or age 30. I just have more experience, more knowledge. I've seen more things, solved more problems, etc. So companies, entrepreneurs, etc. are tapping into this market. So that's possibly part of the shift too towards the older age group, if you will, of entrepreneurs, because people are just, you have more, and I think I mentioned this here in the next point, there's also more availability. So you kind of have a win-win. You have older generations either forced into entrepreneurship or choosing to be entrepreneurs. They left their corporate world jobs. And then you have an entrepreneurship market that wants that experience. They're hungry for it. They realize, geez, our business is failing because we don't know what we're doing. We need people with experience. It's all coming kind of full circle. So it gives an edge in competitive market spaces. Bringing in experts helps. There's no two ways around it. Bringing in people who know what they're doing is going to help your business. It's leveraging real world experience, years of experience to help set the course early on. So think of your business, if your business was a person holding a compass walking north and your job was to walk directly north, and you step 1 degree off path and you take 1 or 2 steps. Well, you're not really that far off course, right? You could sidestep and get back on course. But now think, 100 steps, 1,000 steps, 10,000 steps down the road. If you're just 1 degree off, now you're way away from your target. That's kind of how it is with business. You can get away with little mistakes early on, but as time goes on, as your business grows, you really need to be on course. And that's where these experts, the older generation, can help keep you on course. So next is social media advertising. Again, a thing that's growing, continues to grow. So it's a low cost relative to other advertising avenues, things like, traditional stuff like run television ads, print ads, etc. Advertising on social media is fairly cost effective. You have a huge audience. It's going to be, again, it needs to be an audience that you want to appeal to. So you don't just blindly advertise on social media. You do it because it's going to target the market you're interested in. A growing percentage of younger consumers shop on social media. In my experience, I was actually surprised when talking with, they were like they were 20 years old, I think, and they were buying stuff off Instagram. I was like, wait, you can shop on Instagram? Like, oh yeah, people just selling stuff, like, a shop that puts up pictures of whatever they have and you message them about it. I'm like, oh wow, like just never would have thought of that, but so be it, that's how it is. And that was years ago. So it's only grown. I've seen, so speaking to that example a little bit, it was a clothing brand. They have no storefront. They have no website. It's just the company, which was probably just one person or 1 or 2 maybe. They have an Instagram account. They run ads. People approach them, buy their stuff. Simple as that. Now, of course, you can only grow so big going through that avenue, but here's somebody or a little company that built a business only using Instagram. So it's not just traditional ads. You also have influencer marketing. I'm not as convinced about the influencer marketing. I think there's good and bad to it. I think if you get hooked up with the correct influencer and they do have a huge market, or audience, I should say, it might be worth the money you spend. The problem is there's a lot of people who, I want to say, pretend to be influencers. Like, it's one thing to build up an audience. Like, you can look at somebody's account and they have 1 million followers and you think, oh wow, if they just, mention my product, I'll be set. Well, a lot of times they either have fake followers that they bought. Their audience really isn't the type of people who buy stuff on Instagram. And you only find that you look at their posts. So say they have 1 million followers, they make a new post, but you see that they only have, 10,000 likes. Well, that means people aren't really paying attention to their stuff. So, having 1 million followers is only as good as people who actually engage with them. So keep those things in mind. That's why I'm a little bit skeptical. It's not that I don't think it works. I just think there's a lot of people who try to take advantage of the fact that they can get paid now, when they really don't do a good job for your business. So, and again, it has its place. Not every entrepreneur in the world would make use of this. If you're an appliance shop, chances are you don't need an influencer trying to sell your appliances. So, And then I believe this is last. Green and socially responsible businesses. Again, this is one that isn't new. It's grown over the years. It's like kind of one of those slow progress things. It only continues to grow. You could say it's picking up steam, but I feel like people said it's picking up steam for the last 10 years. I really feel like it's more of a steady growth thing. It's not going away. It's not going anywhere. It may not impact your business. Again, if you are if you're an appliance salesperson, maybe it does impact your business. People looking for like more electric efficient appliances. If you are clothing or a brand, this might impact your business. People looking for more sort of ethically sourced, materials and workforce, etc. But if your business is accounting software, does green and socially responsible, it's not as big a factor. Let's just be honest. So depends on your market. It's an area of growth to consider if you're deciding on a niche. So one thing I find a lot of entrepreneurs, it's like they want to get in business. They want to do something. They don't know where to start. And I definitely don't recommend you just jump into whatever is hot. So I'm not saying go start a green or socially responsible business, but I'm saying if you're deciding and you have a few ideas, at least have an idea of what is kind of growing and what's kind of slowing down. So if one of those options was sort of let's just say green-based business, that might be something you want to consider or entertain a little bit more. So like I said, I wouldn't force a business model into this. Like I wouldn't take my accounting software that I built, not me personally, but if somebody built accounting software and try to do a whole marketing campaign about how they're socially responsible or green, it's just going to fall flat. Nobody's going to believe it. You don't believe it. So don't force your business into this category if it's not there, but if it is there or should be there, it's an avenue that you should consider. So conclusions, wrapping this up. So my advice for entrepreneurs related to the past and in general, do be aware of the changing landscape. Stay ahead of changes. 2021 is right around the corner. Who knows how things, who saw 2020 coming? Who knows what's ahead for us, good and bad? So be aware of the landscape and stay ahead of it. Don't force change on your business that don't make sense. Like I just mentioned with the green thing, you don't need to force your accounting software into being a green business. So do what naturally makes sense for your business, and it will ring more true with your client base. Take time to reflect on what will grow your business. Don't get tunnel vision. Big mistake I see a lot of entrepreneurs do. And it goes back to that very first slide, the stats, the reasons why businesses fail. There was no market for their product. I can count countless times that entrepreneurs have come to me with an idea and they are so focused on how great it is, they can't even entertain ideas of how it might not be great, how it might fail, how somebody might not want their business, how there's competition. They put on blinders and get tunnel vision. Don't do that. There's a reason why that is the biggest percentage of why businesses fail. I think it was 40 something percent, like almost half, mentioned that as a problem. Don't fall to it. Recognize your pain points early and solve them. I've seen this too, where a company, maybe they have a few pieces of the puzzle. They have the visionary, they have the product designer, the engineer, the marketing guy, but they don't know how to raise capital. And they're like, you know what? We'll figure it out. We really don't want to deal with it. None of us are experts in that. We'll just build a super awesome product and people will come to us. Well, no, that's going to be a problem, because I've seen many entrepreneurs go down that road too, where they get as possibly far as they can before they finally acknowledge, you know what, we're missing a few pieces of the puzzle here. And it's like, we could have been working on this, 2 weeks, 2 months, 2 years ago. And now we've severely sort of handicapped ourselves because we're stuck in this situation where we need this expertise. You've probably spent a lot of your budget already, and you are now going to let the competition sneak up on you. So recognize your pain points early and solve problems early. Last thing I'm going to leave you with, everybody, is when you are in doubt, remember these 3 things. It'll keep you going. Have discipline with your business, focus, stay engaged with it, and be patient. It takes a long time to build a successful business. You will reap the rewards in the future. That is it, guys. Thanks for watching this lecture. I hope you've enjoyed the course so far. Be sure to check out some of my other courses, and I'll